Hello, everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothfield, and before we go anywhere, can we talk about last week? We talked about 5 central bank announcements, and of course, the big one was on Wednesday with the U.S. markets and Jerome Powell. And it wasn't really the rate announcement itself. It was the press conference after, and we're going to talk a lot about that here shortly. But the other pieces, man, we had the Bank of Japan raise their rates for the first time in 17 years. Some of you may not even be 17 years old that are watching this. That means this is the first time in history you'll ever see the Bank of Japan raise their rates. They were at negative 0.1. Now it's just above zero, slightly above zero. But there's still more. The Swiss National Bank also shocked everybody by dropping 25 basis points on their rate. So we're seeing a lot of activity that was unexpected in this financial market, and that creates a lot of opportunity for any of you in the Forex space, trading currencies. Oh, it's the good stuff right now. But wait, let me start off with the generalization that we always do here, which is going to be the earnings calendar. I know some of you get bored with the earnings calendar, but we got to start there because there might be something on there that could impact your portfolio. So we'll start things off with Monday, which is a big goose egg. We looked at Tuesday. I got a couple names. BYD. Now, who is BYD? Some of you may know this one. BYD is a company that Warren Buffett invested in many years ago. I don't believe he's still in it. It is an EV startup out of China, and it's doing rather well. Now, of course, the EV industry has been hit rather hard lately. Some companies are doing well, and BYD in the past month and a half is up about 25%, maybe foreshadowing their earnings. So they come out with earnings on Tuesday. On Tuesday, you also have McCormick and GameStop. Yes, we're still talking about that meme stock GameStop. Oh boy, let it go, people, let it go. Wednesday, we get some more names you might recognize. Cintas, Paychex, and Carnival Cruise Line. And finally, Thursday, we've got Walgreens, Boots Alliance. And that is it. Nothing going on their Friday calendar. So again, 663 companies reporting this week. Be careful, check your earnings calendar, and stay away from those from a safety and risk management perspective. Okay, so what were the things that Jerome Powell talked about at the press conference on Wednesday of last week? Well, a lot about inflation. He talked about unemployment, how that's become an issue. And of course, a lot of these questions were just thrown at him from the journalist. And of course, inflation, we had unemployment. You also have growth, which is a big one, and housing. The good news for us right now, I've got 3 of those to talk about as we speak. So let me bring them up right now. We'll start things off with GDP. The final GDP number comes out Thursday at 8:30 a.m. Eastern Time. And as you know, there are 3 readings of GDP per quarter: advanced, preliminary, and final. This is the final number. Now, it may look great to you. On that hard red edge, you can see it says 4.9. That sounds really good. Yay, 4.9. That's not what our inflation rate is. This is a quarterly reading. So if you take the last 4 blue bars, you'll notice the 3 before it are rather low. The average right now is giving us 3.2% of a year GDP growth. Now, that isn't neither here nor there whether it's good or bad, but what was noteworthy at the press conference on Wednesday from Jerome Powell was when asked about this, he gives a summary of economic projections called the SEP. And in that, the voting members of the FOMC have forecasted that by the end of 2025, so a little over a year away, GDP will be at 2%. Whoa. So basically, all the stimulus, everything they're pumping in the markets, our economy is only going to grow at 2% for the year of 2025. That is not a good sign. And with that, that would lead us to believe that the number that we're going to see for this final GDP number is not going to be that 4.9%. It will most likely be lower than that and slowly drifting lower over the coming year and a half. Oh boy, more opportunity for everybody. Let's look at housing as our next topic. And why is this one so critical? Well, because there's a bunch of changes currently going on in the real estate markets. Number one is some of the laws have changed with regards to how commissions are done. That 6% commission that people pay might be out the window now and changing those structures. That may bring in some new people and change the dynamic of the housing market. That said, the existing home sales last week were really good. Expectations were we're going to see a contraction in existing home sales. Came out far greater than expected. Now, why is that important? Again, housing. We want to see housing turnover. We want to see prices go up. That represents growth and wealth. Of course, it also represents something else, which is higher rents, which leads to inflation, which I'll talk about here in just a second. Now, let's go to the big picture and talk about the announcement happening this week. Pending home sales comes out Thursday at 10 a.m. Eastern Time. And what's kind of interesting for me on this chart is most of the bars since 2020, the majority have been under zero, meaning we are seeing contractions in pending home sales. They are declining. Now, that may be of interest to some of you. Right now, the expectation is that that number is still going to be negative, but nowhere near as bad, and that's because the existing home sales numbers surged, so the expectations for pending home sales numbers looked even better. Okay, let's get to the most important and most significant announcement of the week, and that is, here's the classes I'll be teaching at Trading Academy. I'm just kidding. That's not the most important announcement. We're going to talk about inflation. Yes, there is really three major readings of inflation in the U.S. You have PPI, CPI, and then, drumroll please, core PCE price index. And that is what Jerome Powell talked so much about at that meeting on Wednesday. Here's the chart of core PCE price index. This will happen Friday at 8:30 a.m. Eastern time. That's when this will be announced. And if you look historically, let's bring on a red line for the viewers at home. You'll see a horizontal red line come across your screen. That is, kind of the average going back into 16, 17, 18, 19, even 2020. That's the average where core PCE price index was, which is roughly 0.2. That would lead to about 2.4% annualized inflation, which is where the Fed wants it. But notice the most recent reading. We were much higher than 0.2. We're at 0.4. That's like double the norm. And expectations are that this number may actually start to go up. Now, Jerome Powell tried to calm everybody down at the press conference, saying, we've got it under control, no big deal, we're getting at 2%. Remember, this is also the same man, and you could also add Janet Yellen in there, that said inflation is transient, no big deal, it's not an issue. Yet we surged from 2% to over 9%. So, not really trusting the words that our central bankers are telling us right now. And if you look at the prices of energy, oil has been surging for 2 months plus. If you look at the cost for rents, which is a major component, it's the biggest component of inflationary measurements. Number one's rents, or housing and rents. And number two is energy costs. And both of those are starting to surge. Not only that, but we have a lot of other commodities, grain, soft futures products that have been accelerating as well. So the probability seems to be significantly higher, in my opinion, that this chart is going to surge and maybe get to, I think we'll probably come out at 0.4%, but if we get to 0.5%, you got to understand things are going to change. Well, what's going to change, Merlin? Remember, last year, if you go back to the end of 2023, they were expecting 8 rate cuts this year. The market priced in 8 rate cuts, and I was kind of laughing at that one. That's a bit aggressive. Right now, that number has switched to 5 rate cuts priced in this year. And if this continues to move up, we may not see rate cuts at all this year if inflation is not under control. And you can imagine what that might do to our markets if all of a sudden inflation's back on as a major debate and they have to start not cutting, but maybe even raising rates. So very interesting announcement happening Friday at 8:30 a.m. Eastern time. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.